You think a stock has sold off too much and you want to buy it, but you're not sure how to enter. In the past, perhaps you've bought too early and got stopped out. That's certainly frustrating. Or in the past, you did nothing because you got stopped out in the past and you watched the stock soar higher. That's even more frustrating. Let's try and help you with that in this video. In this video, a trader on our desk shares in step-by-step detail how a professional trader enters a stock that is oversold. Specifically, how this particular intraday professional trader trades a stock that is oversold. We hope you walk away with a better approach to trading oversold stocks. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, you're going to learn how to buy an oversold stock for a trade. You're also going to learn how to determine the best earning opportunities in stocks, how to adjust your trade when one important variable is missing, how reading the tape can help you make better trade decisions, and we're going to show reading the tape in this particular video. When to pass on a trade of a stock that's oversold. And as always, we hope the biggest reward from videos like this that we're producing for you guys in the trading community is how to think through a trade like a pro. For those who want to see winning trades to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Okay, great. So today I want to talk about a guidance raise setup that I took on CRM. This was a second day play, and I'll just dive right into it. So some big picture fundamentals. CRM had released great earnings result the prior trading day with a big guidance increase. They beat on EPS, they beat on revenue, and they raised the full year, which is the key thing here. Obviously, I was looking for long setups because they had raised the full year. And so I figured obviously a lot of buyers would step in and that we would have a bullish scenario play out.
Yeah, so we've said in the past, I just want to add one, you're getting a little bit more advanced here, so I just want to make one more point for you to think about when you're looking for stocks to trade. So we said in the past that we really want to start by looking for earnings reports that are beating for the full year, that are giving us full year guidance being raised, or full year guidance missing, because that gives us more clarity, that gives big money traders more clarity on how the company is doing, and allows them, the more clarity that a company gives with its earnings, the easier it is for a big money trader to put money to work into that idea. So, excellent job here of identifying one of those particular stocks that is reporting a guidance being raised for the full year. The next thing that you want to do is think about how much they're raising by. And so, great to find stocks that are raising for the full year. Even greater if they're raising for the full year by a significant amount. So sometimes people are just going to raise for the full year by a little bit, and if they're raising just by a little bit and you're a big money trader, that's not really changing as much the picture of the stock the fundamentals, your fundamental analysis of the stock, if they're just beating by, as my daughter would say, a little bit. Reese says that about a lot of stuff, just a little bit. And so you want them to beat by a lot. So think about yourself as a PM with $500 billion to put to work and clients breathing down your neck and really rich people who need you to make a preposterous amount of money on their already rich portfolio so they keep their money that they don't need with you. I editorialized there. Think about that. Think about you sitting in that seat and you being that person. What are you going to put your money to work into? And so think about how much they beat by for the full year. But excellent start here. Thank you.
So I'll just briefly go over the intraday fundamentals. Overall was 1.35. Beta was 1.6. This is good because we know it'll have a bit more volatility in the market. Stock was up 40% of an ATR from the previous close. Not the best, but pretty decent. ATR 4.15, and the average daily volume is 8.5 million shares, which is more than enough for me to get big in the name.
What did you think about RVol being 1.35 on this particular day?
I didn't love it, and there's a lot of small things in this trade that I didn't love, and there's a reason I didn't swing this trade for a multi-day setup. It's a little disappointing to see how poorly the reaction was from the traders actually, but we'll talk about that in a couple of slides. But RVol, not that great.
So let me just say quickly, I know you have important stuff to get to. I'll just say quickly that if one of the variables are not as good as you want them to be, then you're going to need the other variables to be stronger than you normally look for. So for instance, if RVol isn't that great and you're not that comfortable about RVol, maybe then you need the tape to be stronger for you to get into that. Or maybe you need for the price on the daily chart to be better positioned than other types of trades. Expect more from those other variables to get you to feel comfortable about this being a trade.
So I'll jump into the big picture SPY. On the far left of the chart here, you can see that we had sold off after Trump announced some increased tariffs. So we were trading in a multi-day range after that. And then the day that CRM had released earnings was this day. So basically what had happened here is Trump tweeted intraday about some China news. And then we basically sold off, and you'll see here in a sec how that affected CRM on its earnings day, and that affected, of course, the second day play for CRM.
I just want to make one point about that tweet. So this is when people go back and write books about the opportunity for this year, this is going to be one of the more memorable opportunities of the year. Good to go back and study that particular tweet and the price action after it. There are certain moments when we look back. I actually did a podcast today, and one of the questions was, how have you been doing since 2016? And I walked through 2017, 2018, and 2019. And in going through 2017 and 18 and 19, very memorable trades stuck out. I'd suggest that this Trump tweet is going to be one of those memorable opportunities.
Yep, absolutely. I was a part of that tweet. I was a part of that trade, and yeah, absolutely, it's definitely going to be a memorable one for years, I'm sure. So on the left here, you can see the daily chart for CRM. You can see what the reaction was as SPY sold. The correlation here is pretty obvious. You know, SPY sold after that tweet, and then CRM followed suit and sold with it. Something interesting to note, it found some buyers at the Turner DMA, but you can see we closed near low of day, which is honestly, I was expecting a little bit more from CRM on this day. And so you can see here we almost filled the whole gap, and you know, things looked pretty nasty the prior day, honestly. And then something small to note actually is that you can see here prior to the earnings on the 30-minute chart, we started putting in higher highs and higher lows. You know, CRM has never missed an earnings report. They've always actually done better than their guidance. So I think people were predicting this type of move to happen to the upside. I think the selling was just a little bit too aggressive though. So my morning game plan was to get long if CRM held the prior day low or broke above 155 and held above.
Hey, can I just pinpoint, you make a really important point, and this is something that traders do, professional traders do. Did you think that sell-off in CRM was overdone because it doesn't have as much exposure to China as some of the other names, and therefore you thought it getting sold off as much as it did was a bit unwarranted?
Yes, that was my feeling.
Gotcha.
And yeah, obviously, we had a full year guidance increase, and it was really big actually. It was not a small guidance increase. So it was surprising to me that so many traders had sold it. So yeah, I'll just dive into what the trade, what happened during the trade. So you can see here in the morning, we immediately started selling off this 155 level. And obviously, as I told you guys, I'm not really interested in it unless it gets above and holds above 155, or if it starts reversing near yesterday's lows. And so you can see here, we had this price action of just selling all day and then an immediate reversal off yesterday's close price. We bottom ticked yesterday's close price, as you can see right here. I didn't catch this trade. In fact, actually, my trading partner ended up catching along right here. But for me, there wasn't enough confirmation here in terms of volume. I didn't love this setup. And obviously, yes, it was a great entry to get long with a great RR. But my take on it was I wanted to see higher lows and higher highs put in before I start trying to assume where the trend was going to reverse. So you can see here we started putting those higher highs and higher lows, and then we rejected VWAP once here, which was pretty interesting. But once we got back above, you can see these small wicks to the downside on the 1 minute chart. We were starting to hold this VWAP, and that's exactly where I entered. I told myself if we broke over this intraday level, 153.2, we broke above VWAP, we came back and retested these levels in this area of resistance and held it, then I would get long and risk off these lows. And that's exactly what I did. I got long right here, and I'll show you the tape here in a second at 153. Something interesting happens. We hold this 153 level. So again, 153 is my level, and you can see how we dip below 153 for a second. The bids then stack back up, and then we hold 153 and start lifting off of it. Again, it's a bit of a slow tape, which obviously isn't the most ideal scenario here, but you will see in a sec the tape starts picking up once the trade starts working out.
Well, when it gets below 153, you do see that there aren't sellers who are anxious to hit the bids below there. That is something you do pick up.
So this is the more interesting part of the tape, and I kind of wished I added here, and I want you to watch this 153.2 to 153.3 area. And something very distinct happens here. We start seeing big orders fill. We start seeing ourselves trade above those prices very quickly. The tape picks up in pace, and it just has very bullish tape action. So you can see this guy who's filling 4,400 like it's his hockey or something. So as you saw there, we basically broke above the 155.3 area, and then some sell walls break down because there were some sellers at that level, and then we start getting off that level very quickly, and then some large orders come in and then chase the price a little bit higher. I kind of wish I added to my trade once I saw this breakout. Now, it wasn't a breakout with a ton of volume. It wasn't an amazing breakout. And obviously, we saw that in the R vol, right? We quantified it as not that great. And so, this tape, while it was decent enough to get me to get long this name, I do think that the tape could have been far stronger. And if it was, I would have gotten far heavier on this position if I had the opportunity to do so.
Good, and I like that. I like the distinctions that you're making right there. I like the thinking that you're going through right there. Just because something gets above significant price for you doesn't mean that you should add risk. you add risk if it gets above a certain price and the other parameters that you're looking for are met. And the reason why that's important is because you really want to be in as many A+ trades as you possibly can. You want to save your risk for the A+ trades that you're going to find. And in this market, you're going to find them. You don't need to press. There's more opportunity than you can handle. So, good to say to yourself, good for you to be thinking through, hey, if I would have saw a better tape, I would have been bigger. If I would have saw more elevated R-vol, I would have been bigger. And here's where my stop would have been. Good for you to be specifically going through how you would have added size, where you would have hit where you would have gotten out if you were wrong, where you would have sold if you were right. That's the exact type of review you want to be going through. Specific with your winning trades.
Just a 5-minute overview of CRM. And just to give you guys an idea where I entered, it was right here, and I'll show you the executions in a sec here. I scaled out, went to the pops up, and I didn't hold this one overnight. There's some headline risk right now. I feel like with the ongoing China stuff, and because CRM proved itself to be correlated to SPY, it showed us that it was willing to sell off, like SPY is, with any bad news. So I didn't hold it overnight, and it's not necessarily a position. Maybe if I had a better entry, maybe if the R-wall was really big, and maybe if we had a big volume day, I would have held this overnight. But that's not the case. It wasn't the A+ setup to be holding overnight, and honestly, I'm glad I didn't.
Reading a lot of daily report cards of elite active traders who are saying, in this market, you don't really need to hold things overnight, or in this market, I don't really need to hold things overnight. I'm only going to hold the very best overnight trades. I'm only going to hold the most obvious of overnight trades, and they're rewriting their rules for what they're going to actually hold overnight. They are sharpening what they're going to hold overnight. They're limiting what they're going to hold overnight, because there's no point in walking into a $50,000 write-down on the open, getting entangled with a particular position that's gone against you overnight, which you couldn't really control, when there is so much opportunity out there. Just let it come to you. So way more so than in the past, I am seeing people rethink what they're taking out and making sure they're saving their bullets for intraday trading.
Yeah, I mean, saving bullets has been the theme of this month, honestly. We've had some massive days, and then other days like the past couple where we've had just market consolidations and stocks that don't really move very much. And yeah, I mean, saving your bullets or only taking small technical plays has kind of been my way of getting through the current market environment. The only thing I wanted to end the note off is really my feeling was that I could have added a little bit more risk when I saw the tape confirm my idea. I felt like it could have been more aggressive, but after talking to you just now, I'm not sure that adding here would have been even necessary on this, because you can see here the 5-minute volume on these bars that started breaking up wasn't all that massive. It was bigger, and we saw it on the tape, but like we talked about, quantifying that number, we saw that it wasn't so big, and honestly, maybe the improvement here was not to get more aggressive with this, and maybe it was to leave it the way I traded it.
I actually like that you didn't try and buy that towards the bottom. I don't see bottoming action there that warrants risk. There are certain types of patterns that I look for to put risk on for bottoming action: capitulation, value buying, lower high. I'm not really seeing anything convincing for any of those patterns. It was the low. I like your idea more that this is overdone because it's doing well and it doesn't have as much exposure to China as a lot of other names. So I like that pass as well. And particularly in a precarious market, waiting for it to show you the strength again makes a lot of sense. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.